Under a 1934 law, Congress exempted credit unions from federal income taxes as long as they were nonprofit businesses organized without capital stock and operated for the benefit of their members. So since the collapse now, everybody's been moving their money to credit unions. The bank lobbyists have lobbied Congress, and what they're saying is that they're no longer small little credit unions organized around one business or one group of people. 200 of them now have more than $1 billion in assets, they say, for example. Now, to put that into context, of course, JP Morgan has over $2 trillion in assets. Lord knows how many trillions or quadrillions in liabilities. But they also lost $9 billion on the London whale in the course of weeks. So here they're complaining that 200 of these credit unions have more than $1 billion in assets.
That's right. JP Morgan needs to JP Morgan's balance sheet is basically, it's credit default swaps that they've re-securitized, and then they took some other mortgage-backed securities, then they naked short sold some silver, and then they went to the Fed and they got some credit for that. So you have to add on a new piece here. This is JP Morgan's latest. This is the London whale. So this is the bubble that they've created based on. So here's the credit union down here. Here's where all the money is. You see, they've got to get all that money, and they've got to replace it on their balance sheet. And there's Jamie Dimon, the clown in chief on Wall Street. He said, "Yeah, this is our balance sheet. Oh yeah, the stock's worth 160 billion in money, and it's a perfectly sound institution. There's nothing risky about JP Morgan's balance sheet. It's very sound. You can tell just by looking at the balance sheet. There's no risk here. There's no problems here."